Greetings, folks. Welcome to Liberty Call. Today is Thursday, December 8th, 2022. Hope everybody's having a good day out there. Apologize for not doing a video yesterday. My tummy wasn't feeling real good. Kind of the consequences of having ulcerative colitis. It's not the best thing in the world, and it flares up from time to time. So anyways, hope everyone else is having a better day. I'm feeling better today. So if anyone wants to send me a note, feel free. Looks like the markets performed a little bit better today. I see some green on my screen. I got market breakdown. One of the dumbest humans that works for the government is making a prognostication about recession. Jobless claims are rising, and a tip about Social Security. So let's go ahead and, well, first, if it's your first time watching this, give me some thumbs up. I'd really appreciate it. And, hit that subscribe button and all those good things. Like, share, all that good stuff. And let's go ahead and jump into the numbers, folks. All right. Dow Jones was up today, 0.55%, closed at 33,781. S&P 500 up 0.75%, closed at 39,63. NASDAQ up 1.13%, closed at 11,082. Small caps were up 0.39. The VIX fell today. It had been up last couple days. Fell today down 1.72% at 22.29. Canada was flat at down 0.02. Brazil was down 1.67. Mexico was up 0.67. Let's go over to Europe. Germany flat at up 0.02. UK down 0.23. France down 0.2. Eurostox was flat at up 0.01. Netherlands was up 0.21. Let's see here. That's not France. That's Italy, down 0.14. Switzerland, down 0.05. And Portugal, down 0.93. Both Russian exchanges were in the red today. MOEX was down 0.39. RTSI was down 0.21. And the overnights in Asia, mostly red. Japan was down 0.4. Australia, down 0.75. In China, the Shanghai was down 0.07. The SESE component down 0.25. China A50 up 0.16. DJ Shanghai down 0.07. And the Hang Seng came in up 3.38%. Big jump for that today. Taiwan weighted was down 0.53. So kind of a mixed day across the board, but I think folks out there will probably take it, even though I imagine things are probably going to get worse before they eventually get better. But, that's just kind of the way things are right now. All right, well, let's read through today's market recap. S&P 500 rebounds as investors take rate hike cues from jobless claims rise. So if people are thinking that, jobless claims are going up, so that means the Fed is going to be more cautious and raise rates less. So that's kind of the thinking behind it. So we'll see. Their meeting is next week, and we'll see what they're going to do. So, all right, the S&P 500 rose on Thursday, looking on course to snap a 5-session losing streak as technology shares led a broad-based recovery, with investors seeing a rise in weekly jobless claims as a sign the pace of interest rate hikes could soon slow. Wall Street's main indexes have come under pressure in recent days, with the benchmark indexes shedding 3.6% so far in December on expectations of a longer rate hike cycle and downbeat economic views from some top company executives. However, investors drew some comfort on Thursday after data showing the number of Americans filing claims for jobless benefits increased moderately last week, while unemployment rolls hit a 10-month high toward the end of November. The report follows data last week that showed U.S. employers hired more workers than expected in November and increased wages, spurring fears that the Fed might stick to its aggressive stance to tame decades-high inflation. How could we have avoided that inflation? If you've been watching along, don't print $6 trillion out of thin air. We wouldn't have this problem right now. Quote, markets are looking like they've got a window here for a relief rally before next week's CPI data, since we were oversold here, in quote, said Dennis Dick, a market structure analyst and trader at Triple D Trading. Quote, you're just starting to see a few people coming in buying the dip, end quote. The Producer Price Index and the University of Michigan's Consumer Survey on Friday and November's consumer price data next week will also be in focus ahead of the Fed's policy decision on December 14th. Investors see a 93% chance that the U.S. Central Bank will hike the key benchmark rate by 50 basis points to 4.25 to 4.5, with the rates peaking in May 2023 at 4.92. My personal view is they're probably going to have to go up to around 6 to 7. That's just my own personal guess, just based upon everything that's going on in the world. The U.S. Central Bank has raised its policy rate by 375 basis points this year, the fastest pace since the 1980s. The aggressive approach has stoked worries of a recession, with top executives of major U.S. financial institutions, including JP Morgan, BlackRock, and Citi, forecasting a likely economic downturn in 2023. I think they're probably right about that. Adding to fears, the yield curve between the 2-year and the 10-year Treasury notes has also widened in recent days. Let's see. We already covered the indexes. All 11 major S&P 500 sectors led by a 1.8% gain in technology stocks. Most mega cap technology and growth stocks such as Apple, Nvidia, Amazon rose between 1.6 and 5%. The energy index was barely changed, despite ExxonMobil gaining 1.2% after announcing it would expand its 30 billion share repurchase program. The sector has been under pressure in recent sessions as commodity prices slipped. U.S. crude is now hovering near its level at the start of 2022. Meanwhile, Moderna Inc. advanced 2.3% after its U.S. Food and Drug Administration authorized COVID-19 shots from the vaccine maker that target both the original coronavirus and Omicron subvariants for use in children as young as 6 months of age. Yeah, because they're in real danger of dying from COVID. The regulator also approved similar guidance. Similar guidance for fellow COVID vaccine maker Pfizer Inc., which rose 2.7%, and its partner BioNTech, whose U.S. listed shares gained 4.2%. Rent to Runway Inc. jumped 61% after the closing. 61% after the clothing retail firm raised its 2022 revenue forecast. All right, so some good news out there in the financial land. So certainly not as terrible as it could be. All right, next article has to do with the most wrong person in finance, at least from a government perspective, because this woman is easily one of the dumbest humans on the planet. So this is titled, Yellen Still Sees U.S. Avoiding Recession, Says Bottlenecks Easing. Now, remember, this is the same woman who said that all this inflation that we were seeing last year, it's transitory, it's no big deal, it's temporary. Well, again, and she was also the Fed chair for a number of years back during Obama's tenure as president. And I mean, the woman is she's a government lackey who just does whatever the administration tells her to. I have very little confidence in anything she ever says. So let's read what they have to say about her. Treasury Secretary Janet Yellen said she still anticipates that the U.S. economy will avoid recession. Again, we'll come back to this in a few months when we're in the middle of a downturn. Despite widespread forecasts by analysts and investors for another downturn. As to, quote, whether or not we can avoid recession, I believe the answer is yes, end quote, Yellen told reporters during a visit to Fort Worth, Texas. She highlighted that U.S. payrolls so far have avoided declines. Again, payrolls and employment is a lagging indicator because typically companies have to be suffering before they start firing people. But again, I mean, this woman's probably never had a job outside of academia or the government, so what does she know about running a company? Quote, without seeing significant net nationwide layoffs, I believe we're on the right track in terms of lowering inflation and recessions not inevitable, end quote, she said. Most economists see the U.S. falling into a recession next year, according to a Bloomberg survey last month. That's after the steepest increase in the Federal Reserve's key interest rates since the 1980s. Quote, supply chain bottlenecks are clearly beginning to ease. That's helpful, end quote. With respect to inflation, Yellen also said the labor market, quote, as businesses tone down their expectations for growth, are slightly diminishing their hiring plans. Quits have declined a little bit, end quote, the Treasury chief noted. So, all right, well, that's everything there. So, again, I wouldn't put a lot of stock in anything that idiot has to say. She has been wrong about most things since she's been employed by the government the last decade. So, but again, she just follows orders like a typical flunky who works for the government. All right, next up, not so good news. U.S. initial jobless claims rise to 230,000 as continuing claims hit an 11-month high. The number of people in the U.S. claiming jobless benefits continued its gentle rise last week, adding to evidence that the labor market is cooling, if only slowly. Initial jobless claims rose to 230,000 last week from 226,000 the week before. The Bureau of Labor Statistics said on Thursday that took the rolling average for initial claims over the last 4 weeks up to 230, its highest it's been since September. Weekly claims data tend to be volatile around the Thanksgiving holiday period, making the 4-week number more of a reliable indicator of the trend. The BLS's weekly update also showed fresh evidence that hiring, at least in some sectors of the economy, may be slowing. Continuing claims for benefits rose unexpectedly to 1.671 million, the highest level since January. The figures appear unlikely to change the Federal Reserve's opinion that further interest rate rises will be needed to take the heat out of the labor market, where unemployment is still at a historically low level, while there is still over 1.7 vacancies for every unemployed person. Greg Dacko, chief economist at EY, tweeted that figures still reflect a market in which, quote, talent remains highly valued and reduced hiring is prioritized, end quote, over labor shedding. The steady drumbeat of layoffs, especially from high-profile startups struggling for profitability, nonetheless continued on Thursday as meal kit provider Blue Apron said it will cut around 1,200 jobs, or 10% of its workforce, in an attempt to stem losses. All right. And I saw in the news that Carvana is in a lot of trouble. Their stock price has plummeted in recent weeks, and doesn't look good for them either. All right, last up, a tip about Social Security. If you delay retirement, you should also delay this. For many reasons, including rising costs of living and longevity, Americans are delaying their retirement. While workers in the past would try to hang it up around age 62, workers now are frequently planning on working into their 70s. If you're one of those people, consider delaying your retirement. There's another thing you should make sure you do: delay taking Social Security. The longer you wait to file for Social Security, the more you'll get each month. This is especially true for anyone thinking of filing below the full retirement age, which is generally 66 or 67, depending on when you were born. If you are under the full retirement age for the entire year, the Social Security Administration will withhold $1 from your check for every $2 you earn, over $19,560 in 2022. If you'll reach the full retirement age in 2022, you'll lose $1 from your check for every $3 you earn, over $51,960 if you hit that amount before your birthday. Once you reach full retirement age, though, it makes sense to delay starting Social Security payments until you've reached age 70, as that's when you start to get your full benefit. With the 8.7% COLA boost for 2023, delaying Social Security is all the more lucrative, given that you are still working. You shouldn't need to take your Social Security payment until that age. Once you turn 70, feel free to start getting Social Security, even if you're still working. And there's some other details here. You're welcome to read that. The article is linked in the show notes. So, all right, well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information's there. Hope everyone has a fantastic evening, and I'll see you guys next time. Bye-bye.